Hey future millionaires, and welcome to another ETF review. Today's ETF review will focus on 4 ETFs from Spider. For each ETF, we're going to look at things like the ETF category, fund benchmark, fund summary, expense recap, top holdings, and then performance. And with this great performance information, we're going to see what it would look like if you invested consistently in all 4 funds over a 5 and 10 year span of time. But before we jump into the review, please take a moment to like, subscribe, and share with your friends. Help the channel grow. Now, sit back, relax, and enjoy another ETF review from the Next Chapter team. Now let's jump into it. First, we'll do a quick recap of what an ETF or exchange traded fund is and how do you buy ETFs. Today's 4 ETFs include a Spider Portfolio S&P 500 ETF, a Spider Midcap 400 ETF, a Spider S&P 600 Small Cap ETF, and finally, our special one is a Healthcare Select Sector ETF for healthcare. If you're new to the channel, what is an ETF? An ETF is a basket of securities or a group of securities, usually stocks or bonds, that are traded on the stock market. ETFs prices change all day, just like a stock. ETFs tend to have lower expense ratios and fewer brokerage commissions than its competing product known as mutual funds. On the high level, there's quick 4 steps to buying ETFs. First, determine the type of account that you're going to buy ETF in, usually an IRA or a brokerage account. An IRA is individual retirement account. Next, figure out which investment broker you're going to work with. I'm going to go through a list in the next slide. Then decide how frequently you're going to buy ETFs. Weekly, bi-weekly, monthly. Usually we say don't go past monthly. And then finally, you want to make this is probably one of the most important parts. Number 4, make this automatic. So automatic transfer and automatic purchase. Some companies will let you do a straight purchase and you don't have to let the money settle. But some other companies do need to do a settle. So a quick tip there, if you have to let the money settle, just make it a day apart. So deposit on a Monday and make your purchase on a Tuesday. All right, let's move into the next item. So what brokerage firms can you work with? Go with the big hitters, do your own research, but some of the great ones out there are Fidelity, Webull, M1 Finance, Charles Schwab, E-Trade, and even TIAA-CREF and Vanguard. All of them vary, but do your research and you'll figure out which one's the best one for you. For each ETF, we're going to look at things like the ETF category, fund benchmark, fund summary, expense recap, those top holdings, and finally that fund performance. First ETF, SPLG. This is our Spider Portfolio S&P 500 ETF. This one is a large cap blend. This one is seeking to perform against the total S&P 500 with an expense ratio of 0.2. So that means for every $10,000 you have invested, it's only $2 per year in administration fees. Now, what companies do you get in this? First, you get companies like Microsoft, Nvidia, Apple, Amazon, Meta, Alphabet, Class A and Class C. And if you don't know what Alphabet is, that's the parent company of Google, Berkshire Hathaway, that's Warren Buffett's company, and this is Eli Lilly and Broadcom. Now, for this one, you have 503 different holdings, and they have some great sector mix. Check this out. So sectors, you get information technology, 32%, financials, 12.2%, healthcare, 11.72%. After that, everything's under 10%. So you've got consumer discretionary, communication services, industrials, consumer staples, energy, utilities, materials, and real estate. Let's jump into the performance. For those 503 different companies, you would have had a 1-year return of 24.51, 3-year 9.97, 5-year 14.97, and finally a 10-year of 12.73. That is pretty good. Now let's jump into the next one. Next one is our midcap. This one goes by MDYV. This is our midcap, small midcap 400, and this one is a midcap value category. This one seeks to track against the S&P Midcap 400 Growth Index. So great, we have another index one. This one has an expense ratio of 0.15, so that means for every $10,000 invested, it'd be roughly $15 to hold on to this fund. All right, you get 209 different companies or positions. The top holdings include Aluminum Reinsurance Group, Tenet Healthcare, Fidelity National Financial, WP Carney, US Foods, BJ Wholesales, Ally Financial, Performance Food Group, and Jones Lang lastly. So financials makes up the top hitter there. So sectors, you get almost 24% financials, industrials 14%, consumer discretionaries at 11%. After that, everything is under 10%, but those first few make up close to 50%. So those three groups make up close to 50%. So we get sectors like real estate, healthcare, materials, information technology, consumer staples, utilities, energy, and then finally communication services. All right, let's take a look at those returns. You've got a 1 year of 8.02, 3 year 4.51, 5 year 9.38, and finally 10 year of 8%, 8.02 actually. Next up, we have the Spider S&P 600 Small Cap Growth. This one has an ETF category of the small cap blend. This one is indexed against the S&P Small Cap 600 Index. Expense ratio 0.15. So for every 10,000, $15. All right, let's take a look. You have 304 different positions here. What are your top 10 holdings? First off, you've got companies like Abercrombie & Finch, eSign Corporation, SPS Commerce, ATI Inc., SPS Technologies, Mueller Industries, Heritage Homes, and Badger Meter Inc. Industrials takes the lead for sector breakdown. Industrials is 18.45, information technology is 16.06, consumer discretionary is 16, and healthcare at 11.62, and finally financials at 10.63. Again, those top five make up a little over 60%, so not bad. From there, everything else is under 10%. So you've got energy 7.1, materials 6.62, real estate 5.12, communication services 3.29, consumer staples at 2.78, and finally utilities at 1.71. Nice mix, a lot of sectors here, and that's what you want with an index. You want to see a nice spread so you could spread the risk. But you came here to find out about the returns. So let's take a look. That 1 year is 12.88. That 3 year is 0.05. But we're in it for the long haul, so check out that 5 year. 5 year 8.2 and 10 year 8.96. That's what you got for the small cap that goes by SLYG. All right, now let's move into our sector play. This one is going by XLV. XLV is a healthcare sector play, ETF category, healthcare fund. What is it seeking to track against? The Healthcare Select Sector Index with a nice expense ratio of 0.09, which tells us for every $10,000, it would have been $9 to hold on to this fund. Now let's dig into it. How many companies do you get? How many healthcares do you get? You get 65 different positions. Companies like Eli Lilly, United Healthcare, Johnson & Johnson, Abreva Inc., Merck & Company, Thermo Fisher Scientific, Abbott Laboratories, and Intuit Surgicals. Those are the ones I could say really easily. But we want more details, and guess what? You can find them. So what is the sector breakdown within healthcare? You've got pharmaceuticals at 31.84, healthcare at 21.4, healthcare equipment and supplies at 19.75, and biotechnology at 16.33, and rounding out the list, life sciences, tools and services at 10.69. Now, check out this sector play. Look at the performance. That 1 year is at 13.38, 3 year 5.87, 5 year 12.33, and 10 year at 11.19. Next up, using all that information, we're going to jump into the spreadsheets. We're going to take a look what it would look like if you invest in all four funds consistently for at least 5 years or even 10 years. This is going to be fun. All right, now let's take it to the spreadsheets. So in today's case, we're going to have someone who's investing consistently $8,000 per year. And again, we have four funds. Our first Spider is a S&P 500, 1 year return of 24.51, 5 year 14.97, 10 year 12.73. Next is our mid-cap S&P 400 value ETF. This one is going with 1 year 18.02, 5 year 9.38, 10 year 8.02. Next up, our third is our small cap, this S&P 600 small cap play. And this one has a 1 year of 12.88, 5 year 8.20, 10 year of 8.96. Finally, rounding it out, our sector play this time is a healthcare, 1 year of 13.38, and then 5 year 12.33, and finally our 10 year at 11.19. And because we're big on look at investments over the long term, we're going to go look at a 5-year and 10-year perspective. First, let's take a look at the 5-year. So our 5-year, the balance would have been 55,700, so 55,800 rounded, right? So let's take a look at what that balance would be. That is $40,000 invested, right? So 5 times 8, $40,000, and then growth of 28% on that would have been combined, right? Growth of 28% would have been $15,800 rounded, right? So again, that's a nice little split, but I bet you in that 10-year, it's going to really take off. The difference is going to be huge. All right, check it out. We would have had $142,000. All righty. So it's not quite 50-50, but it's pretty darn close. Invested cash, $80,000. So $8,000 every year consistently over a period of time, right? And then from there, the growth on that $80,000 over time would have been $62,000, roughly $900. So $62,000. So looking at it from a percentage perspective, you would have had a total balance of, again, $149,000. And then your investment would have been $80,000. Then from there, your growth on it would have been 62. And that's how you get that $142,900. Great growth, consistent investing. You can do it. Hope you enjoyed the ETF review. See you in the next one.
Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.